Okay, bias game. So was a little bit mixed, and I thought that this would be a little bit easier, as a puzzle. So it was probably like 50-50 or 50-ish, 50-ish, something like that. Uh, let's do it in different ways. Let's think about this puzzle in different ways. First of all, by the time that we start the trading range, and this is the trading range under consideration, and it starts with the selling climax. What is the bias at the selling climax? Could you please answer me? At the selling climax, what is the bias? Okay. At the selling climax, what is the bias? Okay, and Sharon, please explain your answer. All right. So everybody is saying down, down, down. Sharon, what's the answer there? So what's going on there? So why we're saying that this is a down bias at this point? We have a low low, a very clearly defined low low, and on a short-term basis, we're definitely in the downtrend. We have lower high, lower high, lower low, and lower low. We are in the downward bias. Was there a lot of selling? Was there selling? Looks like there is selling here, looks like there is some selling here, and then there is some more selling that has produced a synchronicity of the effect and the result, and there is an ease of movement with which the price moves down. Sharon, the question was at the point of selling climax right here, what is the bias? So that was the question, if we're still there. Okay, so at this point, at the climactic action, we are in the downward bias. So our first assumption that this trading range is a redistribution. And then we need to prove it otherwise, that this is not a distribution. So how do we do this? All right, well, we know that going into the secondary test of the trading range, we usually will have that diminished supply characteristic. Why? Well, because even in the downtrend, there comes a time when the selling is exhausted. And the selling has been exhausted for different reasons, actually for two. The first one is that it's just exhausted because they sold and they sold and they sold, and now they are not selling. They just sold whatever they wanted at the price that they wanted, and now they're done. The second reason why the selling is less here is because demand has come in at the point of value at the climactic action. It produced some, presence here in the volume signature in the way how the price reacts, and therefore supply has been damaged a little bit. It has been observed, and therefore we are expecting some kind of rally. So in the environment that is to the downside, when we look at the rallies, the key for us to understand is how does the rally behave? Does it overcome the point of aggressive selling? And could it kind of like test that point, stay there, and then continue with the move to the upside? All right, well, what are the points that we would consider here are being, kind of like aggressive points of selling? So anything where the volume signature increases on the downside, then you want to capture that in the price swing. So here is your first zone. And then you're gonna have your also second zone right here on the way down, and this is like the whole trading range that you have. So your OBOT and then your fair value. So what do we see? That when the price comes to the overbought condition, how do we go there? DMAT is average. So there is not really a lot of institutional excitement. We don't see a lot of momentum going up. Reactions are actually, somewhat of the ones where you're gonna get uncomfortable being, like in this reactionary mode for a week and a half or so. So those were not that great. We are staying up. We're committing to the upside, so that's good because we have one progressive close up, another progressive close up. I would say even another one. So if the price has a capacity to stay up, but ultimately it drops down. So, and this is just a function of phase B. And we would say that we can't really overcome this supply yet. We definitely can overcome this supply, but not the one that is at the top. And this supply also will be associated with this sell-in here. So how do we go down? Do we have any sell-in? Yes, on the way down. Yes, we do. And usually here, on this type of sell-in, we might actually be even thinking that we're going to have a rally from here. So in a lot of cases, we would be thinking could be a potential phase C. And how would we overcome that? Well, we would need to see some kind of confirmation that there is a sustainability of this move. If this is phase C, then the price should go above in the sign of strength and then back up. It doesn't happen. So here is a failure. And then the price actually goes much faster down. So momentum increases. We see this in the spread. Volume signature increases dramatically and quickly. And then we have, quite a substantial result to the downside, where we are making a new lower low and then below the original support level of the climactic action, we have maybe like a couple of closes here. Attempt to go up and to come back into the value zone meets resistance right away and meets a lot of volume. This is the highest volume signature on this chart. So most likely supply. And what kind of effect does this supply have? This effect. So if supply would have a more favorable kind of like price reaction, it would look differently. It would look something like, and let me just see if I could quickly find the example of this. Okay, so imagine that, this is the supply that comes in on this bar. What do we have here? It stays horizontal. The testing after supply is coming in, is favorable. It doesn't really show a lot of deterioration in the price action. Whereas here, right away, we have such a strong deterioration, and then it comes with an ease of movement on the diminished effort characteristics. So therefore, we were able to stay above, then we failed, and we kind of continue with the whole down bias where we just from one leg to another, we are confirming that this is down move, and then the last move to the downside that looks like a sprint, and returns back, and then right away has a lot of supply, and that defines that there is a new level there. at which supply is being presented. This was the NASDAQ Composite in 2007, 2008. I thought this chart would be easy just because you gotta remember your history. You gotta know your history. You gotta know your history in terms of the index traded this way in 2007, 2008. So this should be a recognizable chart for you. All right, guys, well, this is it for the bias game. From now on, you're on your own. And this is the first chart that we are not going to discuss. We are probably going to discuss it in the Wyckoff Practicum. We'll have maybe like 2 or 3 charts to discuss right away on the bias game. So this is the next chart. Have a look at this. I wonder what you're thinking. I wonder what you're thinking. Distribution or accumulation? Really quickly, I'm just teaching. Let me know what you think. While you're thinking, we are going to have the bias game over the holidays. So just go to Twitter and you will find that. There is a poll. You could participate in the poll, and then on Fridays, usually the solution comes. All right. So what do you guys think? Accumulation or distribution? Any takers on this? And by the way, thank you for sending me your scorecard on the bias game. I think it's important to keep it. And some of you just, brilliantly, going through the bias game, and your percent is really, really high. Some of you are still, kind of struggling here and there, and if there is some kind of frustration about that, I think that the key is just to kind of understand that you have to go through this grind. At the beginning of your studies, you're going to be more wrong than right because of kind of how you are at the beginning of this journey. And then you have to acquire this new thinking, this new mentality. And once you do, then, it's going to be a habit, and you will acquire this habit. So that's why habituating in this thinking and the mentality, really helps. All right. We're 50-50 on this one. We have 50-50. All right. Well, we're going to look at this when we come back for the new semester. All right, next question. This comes from Dimitri. Let me see if Dimitri is here. Yes. I noticed that sometimes I place trades at work and I don't have time to fill in a log till later. I noticed that I'm unsure how to properly document the quantifications when trading options. I noticed that sometimes I'm not really sure what to put in the notes for the analysis. I'm looking into the automated system that will pull information for me from TD Ameritrade and allow me to add notes, provide insights. Do you recommend any trade log services? Yes, absolutely. And it was just so funny and white-wishing how Franz actually today sent his email with a recommendation for this type of software and for this type of service. And he's showing us here how he's looking at the gold miners juniors stocks, and he could connect it to the charts, specific charts and specific time frames, and then have the journaling, meaning each day he could fill out his thoughts on what's going on. Okay, well, I'm going to show you from a slightly different perspective. This software that Franz recommended, we actually discussed in the June special, Trust the Process. So I'm going to show you the slides from there. This is a trade management software. You have the capability with this software to bookkeep and also to journal, which is very valuable, and it's called TraderView. So at the time, I kind of like was playing around and trying to figure out, how to get the positions in there. I'm not using it at this point. I'm kind of like populating everything in the Excel spreadsheet, which you could use as well. But this is something that is so easy. Why not use this, right? You could automatically upload all of your trades from the majority of the brokerages, or your broker's accounts, or you could do this manually. So either way would work. You could look at your position, look at the charts, have some kind of notes about the position. So here I'm saying long-term position in Shake Shack, looking for the breakout. Long-term resistance target is around this area. It went to actually 108. Add on the way up during meaningful consolidations. It's actually very interesting how I keep saying this to myself and then I keep not doing this. So something to catch as a mistake. You know, this is exactly why the notes are so valuable. I would not even remember that I, had this intent to add to the position, that my exit goal was at 96, 97, close to 100, even though I exited, I think at 92 or even maybe slightly before, like at 90 or 89. Um, that's why it's so valuable. Coming back to that trade and just like revisiting the notes, what was the thinking? Then you could have more more of the analysis that you could put as a journal, as a note here. So for instance, for each of the position, I could write down some kind of synopsis on what has happened during the week, also for the market as well. You could import it from any of the broker. In this case, TD Ameritrade even is being used. All right. And yeah, and that's it. So that would be my recommendation. This seems like a very easy way to set up and just to follow. I think that at some point on our website, we're going to have something similar to this, but it's going to be extremely like Wyckofian oriented type of process. All right, next question. This one comes from Simon. And Simon sent us, these charts before. This is the New Zealand dollar against the US dollar, and a series of questions. I have a question surrounding the identification of the timing of the breakout to the upside out of the trading range. Very interesting. Again, hashtag oil, just because of the potential breakout there and how we're looking at that. So specifically from the blue arrow from November 19th, which is here. Right, and then this is what, 1 day, 60 minutes. And then this is 60 minutes as well. And I think that we're looking at the November, right? So this is the period that we're looking at right here before this break. So we're looking at this breakout right here. Okay, just wanted to make sure. I've checked the following items when assessing if price would move up or downwards. Check each reaction's peak volumes to a certain in supply is decreasing as time progresses. I'm sorry. Check reactions peak volumes to a certain in supply if supply is decreasing as time progresses. Okay. So we're looking for the diminished volume characteristics and diminished supply characteristic. Correct. Why is this important? Because you want to see that supply is being taken by someone else, and the volatility starts to diminish. So you could see how there are two textures here in this trading range. One has a lot of volatility, and then suddenly that volatility is smaller. There are some local pockets of volatility, but even those pockets are not that threatening as before. So this is a good observation. For each reaction, check each fragment of price, spread, and volume if it makes an intermediate swing low as part of the largest reaction to a certain and supply is decreasing. Okay, yeah, so basically we're kind of like looking for that progression of the buy, right? So Simon is basically saying that there is a progress of buying with the diminished supply characteristic for each of the reactions. Yes, we could definitely do that. Check each swing low to see if supply has been observed, to see if price would move up without resistance. Okay, check price structure strength, higher low being created and higher high, but at minimum higher low. In my assessment, I would expect the price to move out of the trading range around November 25th. Okay, where it has low supply, but the trading range continues for some time further. I'm still a little bit confused with the application of action test confirmation. You able to point some of these behaviors on the chart so that I would be able to apply this a little bit better based on the single bars or the reactions for rallies. Okay, so let's deal with the breakout first. So the whole idea that supply should go lower is correct. We kind of see supply much higher in this area, then it's being observed around this area, and then it just becomes somewhat duller, not necessarily dull, but duller, and supply is not that great. So low supply would identify some kind of at least attempts to break out and then the true breakout. So then coming to the second question, why wouldn't we have that breakout before? It looks like the volume signature was going down. So we would be thinking, anticipating that, yeah, supply goes down, we're going to have a valid breakout. Well, apparently, this high volume signature is not just demand, but supply as well. So we still have some selling. So we need to figure out the timing when supply is still going to be present, and yet the reaction to the supply is going to become less than what we've had before. And that actually happens in this area. This is a change of behavior. And it tells us that at this point, yeah, somebody is observing the supply. And then once that purchase has happened, inactivity, then again, attempt to push down, again, absorption. And you kind of gauge what kind of supply you have, right? So this is the level of supply. This is the level of supply, still pretty high, not going to break out. And then as it goes down, boom, finally, we have something that is really, 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 really small in a supply signature. And now we're going up and we are closing at the highest level, but we're still failing. But we closed at the highest level, so this means that most likely the next attempt is going to be more successful. And why? Just because supply just completely dries out. So the logic is correct here. Look at the long-term structure. Think about the implications of the breakout. That's number one. Look at the short-term structure and then try to figure out what's the behavior of the supply and demand, and where supply is just so exhausted that demand is going to just take it out. And then look for that synchronicity. Where is that synchronicity, by the way? This is not going to be synchronicity because supply comes in, not synchronicity because there is no commitment above, no synchronicity because no commitment above. No synchronicity because supply is coming in. This is where it became synced on the increased effort and increased result. And that's usually when the breakout would happen on that synchronization. So we're looking for that as well. All right, good question. Thank you, Simon. All right, let's talk about something else. We're almost at 10 to 5, feedback loop, and then the trader's development. This is usually the last couple of pieces that I give to you guys in the practicum. We start with the 10,000 hours that we need to spend, in my opinion, 10,000 charts that we need to analyze qualitatively. I'm going to repeat this, qualitatively. This means not just like a quick look and then this is my bias. No, it's more about spending time and working on the chart from left to right, looking at each swing, at all of the bars, analyzing. And if we could do 10,000 charts, analyze 10,000 charts like this, we're definitely going to progress. So we started with that, that discussion on the quantity versus quality, and we're going to finish with the feedback loop and the trader's development. So first, let's talk about the feedback loop. And this is something that is a step in the trust process kind of like guideline that we have created for you. This is something that's going to be unique in the new trust process session number 2. Even though I talked about this and I talked with the process coach about this feedback loop, it kind of is going to become a cornerstone of a change in that process. So first of all, let's just go through it. And this is an article that I wrote and published way back. So as you can see, 2013. The editor of this article was Hank himself. And we actually had an opportunity to discuss multiple parts of this small, but, kind of like very effective as a tool article. Usually when we are faced with some kind of decision and think about any of the most recent decisions in the market that, you did, you're going to be having some kind of fight or flight response, right? So this is where you're going to have either withdrawal and you're not going to perform a certain behavior that is needed, or you're going to fight and, you're going to figure it out and kind of, go through this whole process. So a feedback loop process allows us in the moment to make sure that we are behaving correctly, that we are making the correct decision, which is based on our trading plan. So let's go through this process really quickly. If our action to take was either entry, stop loss, or let's say we might just increase position size, decrease position size, move a stop loss, exit, any type of action that you have with your position. So I'm giving here an example. We are entering Google at 600, and those were very old prices in 2013, right? And we are not following the rules. So how would that go? In the feedback loop process, we're going to question our decisions. We're going to question our behaviors, and we're going to ask, are we implementing this action according to the rules of our system? Do any other rules contradict our action? Are all of the rules satisfied by this action? And then what is the evidence that this action is done by the rules? So in the example where we are not following the rules, we're going to say we are not implementing this action by the rules. Yes, there are some other rules that contradict this action. And no, not all of the rules are satisfied. And what is the evidence that it is not by the rule? Well, rule number X in our trading plan states the opposite. So in this step, if we're doing it incorrectly, and you're asking yourself this question before you make that trading decision, whatever that decision is, you can catch yourself in the moment and become aware that you're doing something wrong. I'm entering Google at 600. Am I implementing this action according to the rules of my system? No. Okay, wow. I'm not doing this by the rules. Then why do I want to do this? Well, maybe I'm excited in the moment. I'm seeing some price action that excites me, and it kind of, connects to my past emotional experiences at the same spot. And unconsciously, I am getting excited that, maybe I'm going to have a profitable trade, so I'm jumping in. This is an unconscious way of trading. A more deliberate, conscious, and qualitative way of going through the process is basically checking yourself up along the way, along all of the decisions that you're making around this particular position. By the way, I want to point your attention, especially over the holidays break. If you have a chance, watch the videos that Franz and I are creating for the Anatomy of the Trade, series on YouTube channel that we have. Those are not very long. They are usually maybe on average like 10, 15 minutes long. And there we're discussing different trades that we've made, either him or I. And, this feedback loop step is critical in that analysis, because through the post-analysis, we define the mistakes, and then we could insert it into a specific point in the process, and make sure that each time that we get to that point in the process, let's say we're going through the analysis, and then we have this mistake that we commonly make. So we could ask ourselves a question: are we making this mistake again, as a part of the weekly, daily process? And this is something that we will discuss in the trusted process part 2. Well, what happens next? Let's say that I said no and I still want to open the position. The next question is going to be, if you do follow the system's rules, or if you do not follow the system's rules, are you a disciplined and profitable, consistent trader? Well, if I'm not following the rules, then I know that I'm not. I'm not gonna, in the long run, I might have occasional wins, trading unconsciously, but I'm most likely gonna have losses in the long run. So you want also to know the consequences of your actions. So what we're doing is we're becoming aware in the moment, and then we're doing the cost-benefit analysis right away. So we are identifying that, I'm not going to be successful. So there is an identity question there, and then benefits and cost. I will potentially have a loss and have emotional frustration. That's going to be the consequence. And then the last question: what is your choice then? I'm actually okay, and I tell sometimes, students in the private sessions, if you're gonna take this decision against your rules, and you're fully aware that you're doing this, and you're also aware of the consequences, that it could be a loss and it could produce an emotional frustration, and you're still okay to go for it, I'm actually okay with that. What I'm not okay with when I do this or when students do this and then we discuss this is that we already know how to correct this and then we are actively choosing to disregard this process. And this is the process where, obviously we are creating so much value for ourselves in the way how we change the behavior. We can abort the entry and wait for the system's signal. And that way we will avoid this loss. But not only the loss, if you think deeply about what you do here with the feedback process, is that you're not just avoiding the loss. You're avoiding the repetition of the behavior that forms, the identity of who you are as a trader, and more so than, as a person as well. If you're consistently making the mistake and then producing a loss after loss after loss, how would you think about yourself? What kind of trader do you think you are, as a conversation in your head, as a self-talk conversation? What kind of answer you're going to have to that? And then how could that spiral into something even worse? So you could see how our behaviors produce our actions, produce consequences that spread out not just in trading, but, throughout our whole life. So therefore, it's extremely important for us, to make sure that we're going correctly through the feedback loop process and we're confirming correct behaviors. In this example, exit Apple at 400. We are following the rules in this example. Are we implementing this action according to the rules? Yes. Are there any other rules that would contradict this action? No. That's we double checking. All rules satisfied, triple checking? Yes. Then what is the evidence that this is by the rules? Rule X of my trading plan confirms the validity of the exit action. 4 times we're confirming the same thing. Why? Well, because we are so stubborn as people. We are so set in our ways and it's really hard to change. Very rarely I find people in life that change easily. It's their characteristic, there are quick changes, so but for a lot of us, we need a lot of repetition. We need to break that habit. So we need to make sure that we're, repeating this multiple times. Okay, well, if all of this by the rules, and if I do this, then am I going to be a disciplined and successful trader? Yes, you will be. That will be your identity. And then what would be the consequence of my action and my identity like this? Potential win, consistency of your system implementation, but also emotional comfort and confidence that comes with this. And then what's the choice that I'm going to make? Proceed with the action, exit action. And then whatever this is going to bring you to, whether it's going to be a win or loss, that's already for the post-analysis. All right, so what do I want to do with this for you guys? I just want you to read this article and I want you to think about how you could incorporate this into your trading and into your process. And I want you to keep in mind that, going into 2020, first quarter, we're going to have Trust the Process 2. I want you all there. This is going to be something that we're going to establish, and there is something that is very, very exciting that's coming up, with that particular product. We're gonna have a group that's gonna be dedicated to the process, and that's all what I'm gonna say at this point. But very exciting. Okay, and then the last piece that I usually would give at this point is the table for the traders development. I have created this table back in 2010, 2011. This was on my previous website, if you guys could believe this. It was called Coaching Trading Success. And I was trading a lot at that time. And the most important skill to me at that level was just the mental, mindset. So I was working a lot on that, and that's why, my coaching actually came from that first. And then, Hank invited me to teach Wyckoff method, and then it kind of like took over. Um, what are we looking for here, in this table? We just want to recognize where we are. What kind of trader are we? And we want to understand where we want to go. You look at this from the different level. You also look at it from the point of, consciousness that you have, and from the concept of being, doing, and having, right? So being is obviously being the highest level concept, and having is the lowest. So at the beginning, the beginner is always going to be kind of like having a low self-awareness, just or not necessarily generally, but in most cases, that would be a case as well, but specifically as a trader. There is no self-definition as a trader. There is usually a mindset of getting rich quickly, being overwhelmed with the information, and doesn't know how to approach trading. So if you could remember, yourself during those first months of trading, where you could potentially have been with that type of mindset. Obviously, no methodology, so it's still in the process of searching for the methodology. Obviously, no backtested trading plan. Um, um, and even sometimes, in a lot of cases, no trading that is being done. And on the conditional, emotional condition, it's all about incongruences with trading, with low self-awareness, incorrect emotional responses, during trading. There is no daily routine, and as a result, either no trading, major losses, or occasional wins. And I think that all of us have been there, right? So where am I, let's say, relative to where I've been, from this first column? Okay, so let's see. I would say awareness of self is present for sure. And sometimes I get to this level. I would say probably I feel this year more here, last year probably here. Definitely feel this. Definitely know this. Definitely know this. Probably here. This is a really hard state for me, so I'm kind of, awareness of awareness is being an observer of the observer. So I've been practicing this, but not lately, and my state is obviously not there. So I know that there is a lot of thing on the awareness that I still have to work on. Yes, I would say this, and I still need to work more on profit management. And you could see this from the anatomy of the trades even today, as we were recording this. It was interesting to see how my selection is great, my point of entry is great, and then add-on, which is the profit management, and exit are, suboptimal. So therefore, those are my two big things to work on. So risk management is defined, but the profit management is definitely something that needs to be worked on. I would say that I'm switching between consistent periods and long periods of disciplined trading, and then I still have some relapses here and there. But with years, and with more experience, you kind of see that those relapses are going to be smaller and less frequent, and again, smaller in size. So if you had big drawdowns before, then, after a period of time, your drawdowns, if you study, if you actively participate in the improvement, they are kind of like going down. Emotional conditioning. I would say that, definitely uh, more here. I wouldn't say that, my conditioning is almost automatic. So still, I have to be in the process of, reading my, uh, uh, you know, newsletters on the mental state in the morning. That's the routine that I always do, and that brings kind of like me to that level of awareness. But I think this is the process where I'm still choosing to be aware rather than still being automatic. And, just my background, it just dictates that I'm probably going to spend more time, acquiring those emotional skills, than someone else. Emotional conditioning is part of the routine. Um, so right now, probably again, I'm jumping here, and right now, just my life is extremely hectic, um, and I would say that I'm probably even just sometimes here. I would say that here I want to reside the majority of the time, and I am majority of the time, but then I'm kind of jumping slightly ahead, and then sometimes I'm just getting tired, and I'm aware that I need to be better conditioned, but it just does not happen. And you have to be kind of realistic and straightforward with where you are and be extremely honest. As a trader, as a successful trader, that is one of the characteristics. All right, then responses. I would say between this and this. So kind of like very, I'm feeling more and more unconscious about how I'm mentally responding, to trades. I don't have big emotional response, whether it's a win or loss, even if it's a big win or if it's a, larger loss than usual. Usually that's just kind of like not spacing me out at all. Daily routine. So definitely developed. Probably needs to be a little bit more a part of self. So this means that the routine has to be um, developed a little bit more, and consistency has to be a little bit more there, but definitely here. And then the results, definitely it's a choice. Definitely, I have consistency. Um, there are some periods where I'm extremely consistent. There are some periods where I'm inconsistent. And I think that there is a definition of the market that kind of plays with me. So there are certain market environments where I'm more consistent as a trader. And I think it's also a function of how I studied for that particular period. So usually those are going to be trends. I'm more consistent in trending environments, but that's very natural. And then obviously during the trading ranges, we're going to be less consistent. So that's how it comes. Um, I would say somewhere here, something like this, I still would have some drawdowns. Those are highly associated with the selection that I have on the momentum side. So uh, usually when there is a counter reaction, all of the momentum stocks are going to produce, some kind of drawdown. So those I regularly go through and regularly kind of like think how I could mitigate those. So one of my mistakes, getting out earlier out of the position with the, more size than needed, is all about that. So kind of like looking into this right now. So you could see, and you can kind of like define where you are predominantly in what column. So obviously I'm putting myself here into the advanced columns, but at the same time I'm realizing at any point of time I could jump back and I could regress, I could relapse, and it's extremely important to, stay humble, stay honest with yourself, and try to figure out what's next, right? So I know for sure what I need to do. I need to be more consistent with the process, and then this part will take care of itself. And then obviously this part will take care of itself. So more of the routine on the top of what I do. And I want you guys to go through this yourselves and kind of like go through the table, uh, one column at a time and just think about, how the development happens here, and then try to identify where you are. And then after you identified where you are for each of those, columns and for each of those lines, then try to think, what do you else need? And try to be as honest with yourself as possible. So that's your homework. And then another question. This one comes from Aninda. I usually swing trade momentum stocks. My problem is that even mild market correction leads to 20-30% drawdown from peak equity. Something what I've described to you just on the previous slide, right? So momentum trading is always going to produce that drawdown off the peak. This is very frustrating, as then I spend a lot of time and trades getting back to peak equity. I'm wondering if there is a way I could exit at the top of the swing without giving back too much of my gains, at the same time capturing the majority of the swing. I'm posting a recent trade as an illustration of my entry and exit. Is there a way I could have exited earlier? I feel I could have done better. I have taken WTC and your swing trading course, and I'm subscribed to the WMT. I know one sign to expect a consolidation is a change of character. To exit on that change of character bar. Is there a place I could have exited the stock and preserved most of my gains? Thanks for your teaching. I think avoiding big drawdowns is the biggest challenge for me. Okay, well, let's see. Entry, exit. All right. Well, I would say that we could definitely optimize it a little bit more in terms of the exit, as I understand correctly. And let me actually bring this up. In stock charts. All right. So the key here, I think, from the beginning is just what kind of trade are you going to have here, right? So we have quite a causality right here, and we are in the correct group right now that is showing a lot of outperformance. So what is our intention? Is our intention for a short-term swing trade, the one that we're having here, or is it something where we want to catch a much larger move? So I'm going to assume here and into that the intention was the short-term swing trade, just because how you exited, suggests that it was a short-term. But as you could see, we're probably going to go even higher from here. Okay, so how would we deal then, if this is such a short time frame that we have, how would we deal with the exit? Well, first of all, I want to recognize and I want to take a bow for the trade itself. I think this is a really good recognition of the breakout. Supply is coming in, but look at the test. The test is very favorable with the movement to the upside. So we are expecting the continuation of momentum to the upside. We also expect that the momentum is going to fade at this point, and that we're going to have more of the laborious move up than we've had before. So at the first signs of deterioration, we should get out. Where is that first sign? Right here on this bar. And then this is just a sign of weakness. So we want to get out on the way up. So this bar right here, this first red bar, this is going to be the bar that confirms a lower high plus reversal, and that would equate for the exit. So you would optimize your exit a little bit better than, let's say, here. Alternatively, you could just exit at the close of this bar itself, also a good exit right there. Another suggestion is just to maybe even go to, let's say, 1 hour and just try to find something there in terms of the exit. And it's probably going to be close to the exit that we saw on the daily because they're just so closely connected. So you could see that there is a trend here, and then this break, suggests that I'm done. So you could kind of wait into the close and close your position here, or you could wait until the next day, close your position here, or you can wait until the break and you close the position here. Where position was closed somewhere here, probably on the intraday does not make any sense, right? So again, if you're in this type of swing where you, after the initial jump, you kind of have this movement, but the momentum fades, and you are in a short-term swing position, use intraday for your exit and define where you would exit if that exit is going to be so fast. All right. So just kind of like optimizing the exit a little bit more in terms of where the first deterioration comes, and then on the test of the highs, if it fails, this is where you would want to get away. All right. I think we're good. I think that we can go into the exercise at this point. So 522. All right, guys. I think that's it for today. I think that's it for this semester and for this course. I want to again thank you, all of you, for participating. Again, I thought this was probably one of the most active practicum cycles that we have had. I'm really pleased with the structure, of the class itself now. I would love to receive your testimonials. That's number one. And secondly, give me some kind of feedback. What else can we improve? And we will send out some questionnaires, soon, and going into our early 2020. But you know me, I'm always kind of like looking for the new ways to improve things. So would love to hear your opinion as to what else and how else we can improve this class. And I really, really would like to see you back. So sign up, and let's just continue with the studies. Let's just kind of like keep going and keep improving and keep working on our skills. With that, have a wonderful holiday season. Health and wealth to you, your families, and to all of the people that are in your circle. Um, I really appreciate all of you as members of our community and as members of this class. It was a lot of fun. Um, and hopefully we will reconnect, at the beginning of the new year. With that, guys, thank you so much, and I'll see you in the new 2020. Thank you, and bye-bye.